Oh, so you want to become a real estate investor and you're ready to go. Well, I'm going to tell you, there's a lot of people out there that are winging it. They're like, if I can just buy a house, everything's going to work out. And I'm like, no, you need a more intelligent approach. And in today's video, I'm going to be sharing with you my buy box, meaning the 4 specific criteria that I use when selecting investment property. Because bottom line is, if I pick a property that meets these 4 criteria, I'm going to win every single time. All right, so if you're going to get in the game of real estate, you got to have a buy box, right? It basically says, I got a strategy, I know what I'm doing, and for today's video, we're going to assume that the strategy is buy and hold, which means I want to acquire real estate, and the more real estate I buy and that I own and that I upkeep and rent out, like literally the more money it's going to give me. So I want to own a lot of real estate. You see, whenever you invest in real estate, you should know exactly what you're investing in, because at the end of the day, the 4 criteria I'm going to share with you equate to what's called an ROI, or a return on investment. It's how I know whether I'm really going to pull the trigger and do the deal or not. Now, I want to be really clear. I'm sharing with you my buy box on my last 6,000 deals. And on all 6,000 deals, I have never made an exception to my buy box. I don't make excuses no matter how nice the property is, or if I fall in love with the deal. If it doesn't fit the buy box, I'm out. If you don't have rules set up when you start investing in real estate, then your risk is astronomically higher, and you may end up being one of those real estate don't wanters because you took too many risks and you ended up with the wrong product. Ultimately, I cracked the code, and now I'm going to share it with you. Here's the first criteria inside my buy box. You've heard it. Location, location, location. For me, in my buy box, I only buy real estate in the top 5 markets out of 324 markets that make up the United States. Now, you might be asking, Kris, why do you do that? Well, I'm going to tell you right now that out of the entire country, there's a handful of markets where population is growing the most. That means they're going to need the most homes. And if they don't have enough, it's going to drive the price up. Or we're going to look at the markets with the strongest growing economies. So in other words, I got to have businesses expanding and moving in there. Or because if business is doing well, then they're going to need to hire a greater labor market. And again, it's going to create a demand for more real estate. I also need that market to be affordable, which means I don't want to go into a market like Orange County where a house is $1 million. I've got to buy real estate in a price point where people can afford it. And if you want to know where those top 5 markets are right now, I'm going to share them with you. Here we go. Central Florida, Memphis, Tennessee, Blue Oval, Tennessee, Oklahoma City, Oklahoma, and Jonesboro, Arkansas. In those markets, I am squeezing out the highest ROIs. As in, on my last 2,130 homes between the years 2013 and 2021, in that 9-year study, I asked, looking backwards, what was our average ROI? Year over year, our average ROI was 60%. So you compare that to the stock market getting 8%, or your 401k getting 4.2%, or your savings account getting .0%, and 60% is killing it and kicking trash. Half of that ROI is just because of location, location, location. Number 2, when I buy real estate, I don't buy condos, I don't buy townhomes, I don't do multifamily, I don't do apartments. I do single family homes. That's my buy box. So I don't do any other kind of real estate. And if you say, but Kris, I found a really good deal, I'm gonna say no. You see, I studied and analyzed every real estate type and strategy, and I looked for the one that produces the highest ROIs. And 20 years ago, it was single family real estate, and now it's single family even more than ever before. Why? Multifamily is overbuilt. Commercial, it's out based on what happened during the pandemic. We still haven't recovered from that. But single family, we are currently missing conservatively 3.2 million homes. And the price of this real estate is determined by what's called supply and demand, which basically means we have a demand for 3.2 million more homes, and because we don't have them, as rates go down, the prices shoot through the roof. And that's good for my ROI. The big problem with single family is that most don't actually know how to scale it. So they'll dabble with it, they'll play with it, and then eventually they'll graduate to do something like multifamily. But I've never been able to get multifamily to pencil out ROIs even close to what I've mastered on single family real estate. What I did is I took the time and I developed a team in the system to basically build a machine that would find me the very best single family homes in those top 5 markets, and that is how I'm producing these overwhelming ROIs. And if you're wondering why ROI is such a big deal, let me tell you. In my system with those ROIs, if you can just start with a single rental, 20 years from now, that portfolio could be worth $12 million. So I bought the home, I sold it in a few years, I bought 3 more homes, and then I refinanced them, and I sold some of them, and I bought 6 more, and then I bought 15 more. Over 20 years, if you grow that into a $12 million portfolio, you're gonna be a happy camper. And you're gonna say, how'd you do it? And you'd say, well, it's because of Kris's buy box. Number one, we bought it in the very top markets. And number two, we stuck with single family because it has the highest ROI. By the way, when I say single family, I don't mean like a $500,000 or $1 million home. I mean entry-level 3-bedroom, 2-bathroom, maybe a 4-bedroom, 3-bathroom home. But these are the beginner homes. Why? It's because they appreciate the most and the fastest compared to any other size of real estate in its class. The third criteria for my buy box is critical, and it's what makes me unique compared to everyone else. I buy my real estate below the median. I want you to think what that means for a moment. Nationwide, not in the top 5 markets, but across all 324 markets, the average single family home now sells for $430,000. In my system, I buy my homes 30% below the median. That means that on average, I'm buying homes between $175,000 and $275,000, not $430,000. And the reason why I do that is because when the market eventually crashes, a $1 million home can be cut in half. But a $300,000 home, it can't go down too far because you have the largest population of people that own that kind of real estate. So yeah, I'm not a 2-bedroom, 1-bath, and I'm not a condo, and I'm not a townhouse. I'm entry level, at least a 3-bedroom, 2-bath. And guess what? That is the fastest moving real estate in any market, and it's always the highest demand real estate in any market. That means when the market is fluctuating and doing its thing, I can still move my product. The fourth criteria is the deal breaker. Inside my buy box, after I look at all of my numbers and I look at the rents that I'm gonna collect and how that particular market is gonna appreciate, what my vacancies might run, ultimately, I'm trying to figure out what my ROI is gonna be. How much money am I actually gonna make on my money? If I got $50,000 sitting in a 401k and IRA, and I want to pull it out, or maybe it's equity in my home, and I want to put it into my first rental, or maybe it's your 10th rental, well, you have to know how much money you're going to make on it. For me, my buy box says that unless I can project at least a minimum 25% ROI, I will not touch the deal. Now, you know over my last couple thousand deals that I'm averaging 60%, but I have a minimum, and that minimum says after being safe and cautious in all of my assumptions, real estate at least has to produce a projected 25% ROI. And if that's a yes, I'm going to put an offer on that deal. By the way, there are multiple profit centers to determining the ROI. You've got the discount equity of, am I buying it below the market? I've got net cash flow of, well, after I collect my rents and I pay my mortgage, how much money is left over? That needs to be a positive cash flow. Number 3, principal reduction. I've outsourced the paying off of the home to the tenants. They're actually buying me the home, and there's an ROI on them every month paying down the mortgage. There's a depreciation or tax savings ROI, which is the government lets me write this beast off after 27 and a half years. So every year I get to write $5,000, $10,000, $15,000 off, cancels out any taxes I owe on my cash flow, and gives me even more tax benefits that drop to my personal income. And then finally, you have what's called appreciation ROI, the 5th profit center, which means if you're in the right market, it's going to go up in value, and that's going to make you money too. If you aren't calculating what your projected ROI is going to be, then you've already lost the game because now you're playing with lady luck. Now, I'm not relying on luck. I'm relying on the numbers and the data. And if you need to know how to calculate ROI, I made a video right here called the 5 profit centers of real estate, and here's how you calculate them. Listen, I've got real estate down to a science, and you can benefit from all of my hard work. How? Well, you could actually partner with me. Like, I have 2,000 partners around the country, and what I do with them is they basically take money, sometimes from their 401ks or IRAs or equity in their own home, and they say, Kris, I need this little bit of money to turn into a portfolio of several homes so I can produce enough passive income so I can quit my job and retire. And if you're interested in a financial game plan that leaves you a multimillionaire, well, I've done $2 billion worth of real estate, and I might be the partner to do 100% of the work for you. If you want to know what that looks like, click the link below, learn about partnering for free, and if we end up partnering, dude, we're gonna kill it together. Hey, thanks for watching today's video, and guess what? I've got 2 recommendations for you. Earlier in the video, I said, yo, if you want to know really the details on my top 5 markets, click right here and watch this video. Or if you want to know how to calculate your ROI and really understand the 5 profit centers, click right here and watch that video.